안녕하십니까. Namaskar. Very good morning. I'm Choong, Director KI-FEIF office. Very nice to meet you, everyone. Uh, Spring in India is short and quickly turning into summer, with the temperature rising very fast. So for me, summer starts in April, but the best part that this is when delicious mango rice. April is also the start of the new financial year in India. So it's a fresh beginning for the government, business, and institutions to take on new challenges. However, the environment surrounding us do not look so favorable. The India GDP growth rate for the third quarter ending in December was 6.2%. While this is better than the previous quarter, it is 3% points lower than the same time last year. The estimated the growth for the full fiscal this year, the ending in March, is 6.5%. This is still strong compared to the China and Korea, but it has slowed down from 9 to 2%, the revised growth rate in the previous year. The stock market has also been the struggle, even though the Sensex Nifty have recovered slightly in the last 3 consecutive days because of the returning the foreign portfolio investors, but they have dropped more than 10% since their peak in September last year. The exchange rate has been unstable, moving from the 83 rupees per dollar last year to over 87 rupees now. The Donald Trump return to the White House is further slowing down the recovery of the global economy. Earlier, Trump used to call India as a tariff king, is now turning himself into a tariff emperor. He is disrupting not only the trade orders, but also the international financial market by mobilizing tariff by countries and products as well as reciprocal tariffs. The uncertainty that the economy has the most is amplified than ever. On the other hand, the Modi government, now in its third term, is working hard to boost economic growth and development. It has introduced various policies and increased capital investment. The government and private sectors are making large investment in renewable energy, electronics such as mobile phones, automobiles, especially EVs and semiconductors. Today, the KIEP office has organized this forum to discuss India's economy, financial market, trade, and investment policy as we enter the new fiscal year 2025-26. I sincerely thank all of you for taking time to join us. A special thanks to Minister Lee Sang-woo, Deputy Chief of Mission, Korea Embassy, and Mr. Sumanta Chaudhary, Principal Advisor at CII, and the distinguished speakers from the Indian government and the institutions, and all esteemed participants. The Kiev Daily office was set up to strengthen economic ties between Korea and India. Each one of you here play an important role in this partnership. I hope today's discussion will help us find new opportunities while managing this. Let's work together to make this fiscal year a year of stronger economic ties between Korea and India. Once again, thank all for being here today. I encourage you to participate actively in our discussions. Now, let's begin the first Korea-India Future Economic and Industry Forum of this year, organized by TF Daily Books. Thank you all. 감사합니다.
Ladies and gentlemen, namaskar. It is my great pleasure to welcome you to the second Green the Future Economy Industry Forum here today. And I, of course, first like to express my deep appreciation to KIEP Delhi office for the hard work and efforts to prepare this wonderful event, and also my heartfelt appreciation to all the esteemed panelists and participants for joining us today this morning. I think this forum could not have come at a more appropriate time. We are all experiencing, witnessing uh, tectonic changes, to say the least, to the world order that we have taken for granted for such a long time. And in response to this, countries are recalibrating their strategies, diversifying partnerships, and seeking new pathways to strengthen economic resilience and also drive sustainable growth. And Korea and India, where as two dynamic economies with complementary strengths, we have a really unique opportunity to further deepen our collaboration and navigate these uncertain times together. So I think against this backdrop, today's forum assumes great importance. It serves as a valuable platform to explore India's evolving macroeconomic trends and policy directions, and to help us forge a partnership that not only mitigates global risks but also unlocks new avenues for trade investment and innovation. Ladies and gentlemen, this year really holds particular significance because this year marks the 10th anniversary of our special strategic partnership between Korea and India. As you know very well, over the years, our relationship has really grown in depth and breadth with increasing economic cooperation, technological collaboration, and cultural exchanges. In particular, Korean businesses, we've always been a part of India's journey towards economic development. All the major companies came here in the 90s, and today, the brands of these companies like Samsung, LG, and, and other companies, they're not only made in India, but made by India. Really, the fact that Indian companies they contribute to the Make in India vision. So, building on what we've accomplished so far, I think now we stand at the threshold of the next stage in our economic collaboration. And I think this new collaboration will extend beyond what we've achieved so far, and then will include all other strategic sectors such as shipbuilding, defense, and nuclear energy, and so forth. अंत में मैं इस सेमिनार की सफलता की कामना करता हूँ। मुझे उम्मीद है कि आपकी चर्चाएं आने वाले समय में दोनों देशों के बीच संबंधों को और मजबूत करेंगी। धन्यवाद।
So, Sangulim, distinguished speakers, ladies and gentlemen, let me at the outset thank KIEP for inviting me to this second Korea India Future Economy and Trade Forum. And by the way, Salim, I'm really impressed by our Hindi. I think we'll have, if we have a competition, perhaps you might beat some of us. But now, and I think two previous speakers have said, we unfortunately today are now in a world where we don't know what tomorrow is about. Uh, the 70, 80 years of the world system that has been built uh, is unfortunately under an existential threat. And today, we all have the 2nd April, follows the 1st April. Uh, in fact, on a lighter side again, I think Donald Trump did tweet that he's not doing it on 1st April because the world might think it's a bad joke. Uh, but be that as it may, I think it's time for the world, of course, to look at, in some sense, newer partnerships, renew existing ones, expand into horizons that perhaps we might have missed out. So, as they say, whenever there is a threat, there is also an option. And while I think the world could well have done without such a threat, uh, but you also need to see how at least part of this can be converted into an opportunity. I do have a small presentation of which perhaps is familiar to you, so I will not bother to go through each slide, but maybe to give a taste, more importantly, of what I see as India Korea and the larger Indo Pacific region, because I think that's where the activity is bound to happen. So this is essentially the outline, looking at the global scenario, which to some extent I said all estimates today that were made in the global scenario stand, I think, corrected, and in inverted commas corrected, because we don't know what that correction will be. Uh, just to kind of again, I don't want to repeat these figures. We all know that India is the fifth largest economy in the world in terms of purchasing power parity. It's the third largest. But figures apart, the important point is it's the fastest growing economy in the world and will continue to remain the fastest growing economy in the world, though albeit the growth has slowed down a bit. And that's partly the global scenario as well. All these conflicts, uncertainties ultimately take a toll on businesses, on consumers, and all of us. Uh, the important point that this graph shows is that the period of doubling is shortening. And that is the important point. Figures, absolute figures in themselves sometimes don't mean much. But what happened or took over a decade to do, perhaps now could be done in 7 years. Of course, these are all presumptions based on before, as I said, the uncertainty that we are now faced with. Uh, the other part, of course, is looking at per capita incomes. And here, too, of course, the trajectory that is supposed to grow is quite impressive. And it's a challenge. It's a challenge for India because of the numbers, because of the diversity, because of some of the imbalances that are there. But in order to grow not only at fast rates, but to make it more inclusive and equitable, that is the test of the Indian development strategy. This is again, these estimates are all, as I said, estimates which perhaps now might need some course correction. And if you look at the figures, it's again very clear that 6.5 stands tall compared to many of the others. And obviously, we are not happy with that. We would like that to go even more, but that's the truth so far. What are some of the domestic trends? And here I think we did mention the 6.5% that Dr. Chu mentioned as well. And I think there are, of course, estimates of what might happen in the future, which is certainly looking better. Again, with that caveat. This is, of course, the capital market. And many of you follow the capital market. Of course, capital markets all over the world have had this shock, and that's seen in the index. But if you look at or discount that for the time being, the MSCI index, which is a monitor of the index of emerging markets, of 24 emerging markets, does clearly show an upward trend, and India is moving up. Even if you look at IPOs which are there in the market, certainly I think, of course, there was a certain peak, but we are pretty close to that peak, and perhaps in this year or maybe the next, we might actually go up that scale. Again, these are, for students of economics, what does GDP contain? Simple C plus D plus I plus X minus N. And if you look at these four components, private consumption expenditure, uh, you will find that uh, this expenditure for India is again climbing and climbing quite high. Uh, and this is, of course, because of what we will see a large and growing middle class, not just in numbers, but with the ability to purchase. Infrastructure. And this, many of you who follow over the past few years, there's been a huge pump priming by government, which is public sector infrastructure. And the idea being that that would also let loose the private capex. So to some extent, the private capex has increased, but perhaps here there is a scope for improvement. And of course, all this uncertainty frankly doesn't help because everywhere in the world, every investor principally looks at certainty. That is their fundamental calculation. When they do and if all those calculations go all right, then you have a real problem. So that is a problem that I think will beset, perhaps, in my opinion, the whole world. That people will perhaps wait and watch. Uh, Again, these are schemes that many of you who follow India certainly would know. I don't want to spend time on one of them. These are different parts. You have infrastructure, you have trade, you have manufacturing, you have ease of doing business. The usual kind of parameters that one should see if you are to move up that business confidence ladder. And all of this ultimately contribute both to business confidence, to business perception, and to action on the ground. Uh, Infrastructure spending, as I said, this is a huge opportunity, and certainly for Korean companies, we all know their strengths in infrastructure. This is certainly something that will continue. And as India, while it has done very well in infrastructure, the needs are just multiplying. And therefore, over the next 2 decades, this infrastructural spending will certainly be one of the movers and shakers of the Indian economy. And that is almost to me tautology. And therefore, opportunities as a percentage of GDP is doing well. Certainly still a little below Japan, sorry, China, but doing pretty well. And of course, sustaining this over a long period of time has its own challenges. This is the demographic dividend. And this, of course, is really in that sense. And that is why you have these stories about the next 3 decades being India. Certainly, in terms of demographic dividend and the young population in this country, there is absolutely no comparison with the rest of the world. We are just dreams ahead. But that's not the only thing. The challenge is to convert this demographic numbers of expectation, this demographic numbers of ability to be, if I can use the term, more market ready. And that is the huge skilling requirements that are there to ensure that this massive young population, incrementally, absolutely mind boggling numbers, how do we ensure that their productivity, their standards of living are actually higher? This is the second area where I would say the so-called framework of skilling, where perhaps India and Korea can look to more collaborations in specific sectors where Koreans have excellence and vice versa. So while the demographic dividend is in some sense an opportunity of a lifetime, this combination of circumstances will not come back. Very, very unlikely. So these 30 years, one will have to ensure that this demographic feature becomes India's strength globally and of course for us. Uh, a similar trend, of course, is in urbanization. So why urbanization? We all know has its own challenges. Challenges of traffic, challenges of public facilities, but at the same time, it is also indicative of mobility. And mobility is the basis of economic prosperity. So certainly, if you see and if you look at the chart of the lower middle and upper middle class in India, that's huge. And what is interesting is that over the next 5 or 6 years, this lower middle percentage gets converted to upper middle, which means the purchasing power of those actually improves much more. So that's revealing. So therefore, the normal demand patterns that you might be faced with on the face of it, that demand pattern, at least from urbanization and the middle class, we seem to be on the right track. Of course, it's equally important in a country like India to ensure that its rural populations purchasing power also keeps on increasing because that's also where a huge consumption base is present. Some of the, I thought I'll mention this because this has just happened. And the reason I mention it is because some of them have very clear implications, not just for India, Korea, but for India vis-a-vis the Asia Pacific and for India vis-a-vis the global economy. And just to recapitulate, it's not, I'm sure you would have seen all of this. One of the important things, and this is key, is investment. And we all know that one of the fundamental tenets of investment, there are three actually: investment liberalization, investment protection, and investment facilitation. Now, investment protection is done by countries through normally what are called bilateral investment agreements. You can call them BIFA, you can call them anything. The India Korea SICA, for example, has investment protection inbuilt within the SICA itself. Now, there is a model BIPA text. As you might be aware, India rescinded unilaterally in 2015-16 all its bilateral investment treaties, which were standalone agreements. So, of course, the India-Korea investment treaty is still very much holds. But the others were rescinded. A model text was introduced. It created some concerns globally. And I think this budget has clearly said that we are willing to look at it, we are willing to progress on this and modify it with the requirements of the changing world. So this is an important message because investment is a key. The second part is, of course, a very important sector from the point of view of FDI, and that's insurance. And now you have 100% foreign equity limit, which is, of course, as you know, 100% ownership. So that's another significant move for investment. And then there are, of course, host of things for trade. And I don't want to get into each and every detail, but the idea is this X minus M factor, which I said, of the GDP or GNP, in fact, needs to be propelled. And that's exactly what the rest of these budget announcements are doing. One of the very important things is the creation of this higher trade net, which should make life easier for all traders, for all investors, and for all industry, because that should be an online platform. So you have the digitalization of trade and investment, which is, of course, one of the best cost setting or cost cutting devices that you could use. One other very important thing is that India is fast developing into a hub for medical tools. And this is something that is our strength. Uh, in fact, it is this part of the world, the Asia Pacific region, both because of its unique systems of medicine, uh, also because of the fact that they are able to combine more often tourism with health facilities. So this has got a bit of a spurt, and this is something that is happening as we speak. Perhaps not so much from Korea or Japan, but If you actually visit an Indian hospital today at this point of time, you would find them flooded with people from some of the neighboring countries, Afghanistan, Middle East, and so on. Because you get treatment here for a fraction of the treatment costs that are there abroad. And a large part of this, by the way, is going digital. So you don't need to come and actually visit a country. A large part of this would be done digitally. And if you need some surgical sort of intervention, then perhaps you need to cross borders. Again, uh, global capability centers. And I'm saying this because these are all ways in which India's relationship with the global economy will grow. Every Fortune 500 company in India has a global capability center. Now, these global capability centers are now becoming the pivot of two revolutions. The first, the AI. And already in these GCCs, we've been moving up that value scale using AI. The second is what IT and ITS did for India. It started from Bangalore, but it went into tier 2, tier 3 cities. And that's exactly the replication model that India is trying to do now for GCCs. So, therefore, the importance of this. And finally, of course, you know, the tariffs. And I came to it last like because you're speaking too much, in fact, about tariffs. Unilaterally, this budget has in some sense showed that India is still, in some sense, now once again, in some sense, committed to rationalization of its customs duties in order to bring it in line with its aspirations for being part of global value chains. And I think this is a very important thing, particularly with Korea. We know Korea's strength in the value chains, whether it's in auto, whether it's in electronics, and so on. So perhaps there is a forum for doing all of this, and I'll come to this in a minute. Uh, Again, I don't want to spend too much of time on the numbers. They are there for all to see. Perhaps the important fact is that in 2025, the WTO has projected a faster rate of growth in world trade. But mind you, this was before the last 2 months, and I don't know what that projection will be now. Nobody is brave enough to actually project a figure till at least the next 2 months. So taking it with a pinch of salt, the fact is that global trade somewhere in the range of 2.5 to 3%. Uh, how does the trade between India's so if we see today services trade is now caught up on a month-on-month basis with mercantile trade. In fact, if some of you follow, in the months of November and January, the monthly figure of services trade was higher than that of merchandise trade. And this is not coincident. This is a trend which will increasingly come. And in a sense, the recognition that this will happen comes from the fact that by 2030, both are supposed to be at the same figure $1 trillion each of services and merchandise exports, which implies, given the difference right now, services will have to grow at a much faster pace than merchandise, and that is precisely what is happening. The CAGR of services trade is almost double that of merchandise trade. And the point is, let's not just look at manufacturing, which is often the only thing that we look off. Let's not forget services. And let's not forget that for all our economies, services today contributes at least 60% of the GDP. So therefore, one needs to emphasize services. FDI. Now, FDI again has taken a bit of a beating the world over. And this is the global FDI landscape. If you see the figures, 23 it's been a downward trend. 24 perhaps
you might just get back to the 22 levels. We are not entirely sure. But there is some slowdown in the global FDI, and all this geopolitical crisis, the cyclical, or I would say, protectionism, all this has led to again some fragmentation. Uh, if we look at India's FDI flows, certainly this is one of the preferred destinations. India is now being projected as one of the places to come and do business. It bears out in many numbers and many ranks, which I don't want to add. So this is, but if you look at where the FDI is coming and where the FDI is going, 67% of the world FDI is in services sector. And that is precisely what is mirrored in the Indian case. Again, too often we speak only of manufacturing. Manufacturing contributes only about 15 to 17% of world FDI flows. Uh, FDI outflow again, well, obviously it's much lower for India, but it's catching on. And as I think globalization, well, hopefully still continues, more and more Indian companies want to go global, and therefore outward FDI. And again, it's the same story. A large part of this is the financial insurance and business services. Very quickly, what happened to India Korea? We all know that we signed a CECA. That's the fundamental basis of the India Korea engagement, apart from India ASEAN as well. And this is simply the numbers. We are about 27, 28. We have reached bilateral trade, $1 billion, of course. And again, I don't want to get into the composition itself. I'll skip this. The SEBA, in other words, this is something which now is also in some sense under review, the possibility of renegotiation. It's done as far as I think the tariff liberalization goes. To a large extent, this is all completed. There are, of course, some areas more which perhaps could be taken up. But uh, if we look also at the Korea India services exports, it's about $8 billion. Still, I think huge scope for improvement. But certainly it's been growing, but perhaps not growing at a pace that you would need to. Uh, and finally, I don't want to say what this is some of the important features in the India Korea important agreement, but let me just start by saying three things. One, India and Korea are both members of the Indo Pacific Economic Framework, and we all know that two pillars of this agreement, the supply chain pillar and the clean energy pillar, had actually come into being. And these are very important initiatives which India and Korea should look at. Perhaps the auto sector. There are areas of collaboration, I think, not of necessarily competitiveness. So, this is something that I think provides an opportunity, not just within IPF, but between India and Korea as well. Second, we all know that the larger engagement in this region is also happening. Korea, of course, is a member of many of these. But I think one has to remember that you have the RCEP, you have the CPTPP, you have the ASEAN as the central force and ASEAN agreements with each one of us. All of this and the IPF will shape the future of the Asia Pacific. And I do think that India and Korea perhaps have a far more important role to play in this. And finally, I think it's clear that India's growth trajectory, India's ability to attract investments, India's infrastructural competence, India's ability to have unique talent and skills, not just in the IT and ITS, and the need perhaps for greater collaboration and engagement of the private sector in technology, in areas like AI, is something that I think we should all look forward to. So, saying this, once again, I do hope that the conference today and this KIEP has been complimented for doing this would perhaps provide a spectrum of how not just India Korea relationships, but in the context of the world that we face in, collectively, it becomes a better world to live in. Thank you.
Good morning, everybody, and I'm happy to be here. We thank AI for making an important event, particularly the kind of uncertainties we are going through now. You see, it's actually talking about the Indian economy, the kind of strength and weaknesses we have, and also the new policy of trade policies by the US, what kind of implications, we're going to face on India's exports and overall grain, and thereby the kind of impact it will have on India's growth story. I have a small presentation that my team has made it widely, so I will be going through much faster. Let me just start with the fact that India's top brightest spot, I think everyone has known, given the favorable demographics we have, given the stable partner against the world economy, and the kind of strength we have. Let me just tell you the numbers we have projected, the macro goals we have for India's digital population by 2047, India will be completed 100 years, and where will we be? Let me start with that. And then I'll tell you the kind of growth story we have achieved, the kind of reforms we have really initiated. And going forward, the kind of uncertainties we are likely to face and what we need to do to navigate through all these uncertainties. So, in 10 minutes or so, I'll go through quickly and I'll be very happy to answer anything you have. Yeah, here is what if the macro goals divided by me with the credits. We will be reaching 5 billion economy in 2047, and the growth rate is close to 9.1%. The last 10 years, we look at in dollar terms, will grown at 8.3%. So it's very much possible given the strength we have. And here some of the intermediate macroeconomic variables, the savings, investment, exports, and all that we need to achieve to get there. And that would put us in the higher income categories that's close to 18,000. Today it's around 14,000. And the kind of savings they're changing every year, the savings, it would be around $17,000 in 2047, and we would be getting 18,000 brackets. So that is where India would be part of the higher income categories. Now, last 10 years, if we look at last 10 years, we have grown on an average, the CAGR is 6.6%, and the world actually grew at 3.4%, so almost double the growth rate. And it has not come as a default. It has come with very systematic reforms. If we just look at the lower, um, the two rows you see, one of the first one is there are many reforms we have taken, but the first one, the asset quality, look what happened, the bad loans here. The IBC engine took the age of doing business. The GSP and demo, which formalized the economy, and now what you are seeing that we do lakh crore so we are getting every month. So that is an outcome of the very big reforms that are taken. Atmanirbhar package, look at the rebounding growth, the recovery that has happened. 9.2, 7.8, 8.2 on an average. The post-recovery period, the post-pandemic period, we experienced the growth rate little over 8%. Even this year, if you look at all the estimates, we are going to get something like 6.6 to 7.6%. And that is quite an achievement given the heightened uncertainties we are going through. Then you have, managing COVID crisis. The COVID was not a crisis, booming crisis because it's a crisis, the economic crisis and also language crisis, a crisis. It's kind of multiple things. And I think we managed very well. In fact, not only our economy, we managed the world economy to get back. Then managing price stability. You see, in macroeconomics and student of economics, always you see, yeah, inflation is like a fever. If you are not having a good health, then it gets reflected in the fever. So the price stability, which is to be the price evolutions are little over 10%. It was 2014. It got stabilized. Of course, we adopted what is called inflation targeting, which gives us the bandwidth to the 6%. And we always manage all these 10, 11 years. We manage the inflation rate. This is the biggest macroeconomic variable. That's one of the fundamentals, and we have done it very well. So, what are the strengths? The economic indicators, the left-hand side, it shows the increase in per capita income in rupees lakhs. The right-hand side, it shows the educations. And it's very clear how systematically we have managed the economy. And this is the phase, remember, where anti-globalization will actually reach the peak. US, China, Carico, in the kind of European countries, the taking steps, in fact, the protectionist measures, and everything happened, during the last 30 years. So, uncertainties, I think we have navigated very well. Now, it's about the, fiscal stability. It's another most important macroeconomic variable. What you say is last 10 years, with all this uncertainty on, so the government of India full and go for a fiscal consultation. In fact, the private deficit, which was 1.1% in 2014, it reduced to 0.4%. Then you had a huge crisis, so it's called pandemic, and every countries they went for stimulus, so did we. But then we didn't go the way actually other countries have gone. Some of the countries they have gone to the extent of 15%, 20%. I think in our case it was limited but very effective. Now, since it was kind of, yeah, absolutely. The essential loves on the part of the physical confrontation, but we started really improving the physical position. You see the ground physical deficit, the price deficit, both started going down, and it will be reaching 4.4 physical deficit target next year. And the second part is, one of the good things we have done is we have made the fiscal accounting framework very transparent. Our budget items are part of the budget accounting now, and also the focus on capital expenditure. Everybody knows it's very basic, fourth standard economics that capital expenditure has highest one. Revenue expenditure is 1.2 to 1.3. The capital expenditure is like close to 3. And that is where we have focus because reduces trade and transaction, improves the competitiveness of the economy, and that is what you see that in 10 years, yeah, it is the capital expenditure by 3 times, 1.5% to close to 4%. That's quite an achievement. Now it comes to the economic indicators, the biggest strength I think we have, or the biggest endowment we have is the demographic. In fact, the average is close to 29 when the country is going to zero, close to 42 potentially, that's 149. Most of the countries are rating, then India could be the source of labor actually to the world. And this is the time, the next 2025, which is that all the countries who have really come up, they have used that favorable demographic composition. And we have, the inflation point of started on 2040, and till they your what you call the working population will be growing. So we need to capitalize it. And this kind of endowment, no country, no other country or continent even has it. So this is the biggest strength we need to keep it. Of course, for that we need to focus on health, education, skills, all that government of India has been doing, but a lot more things to be done. Then unemployment rate, last 6 years data, what you see is over a period of time. Like, we are doing much better. The unemployment rate has been going down from 6.1 to 3.2. So things are working on the ground. Now, let me very quickly go through that. What are the improvements that have happened? Because this is the phase we have seen the NBFC crisis. This is the phase we have seen also the credit growth going down. And this is the phase the world actually having lost slower growth. This is the phase also the world trade was growing less than the world growth. So it's a very difficult phase. But still, with the consistent structural reforms, India has managed a strong, what you call macroeconomic foundation. So first, the banking sector. Look at the profitability last 6 years. Indian banks are having profits. And a lot more indicators, net interest margin is like 3.3, it is growing. So they are doing fine. Gross NPA Once at the time, it was 8 to 9%, and today it is 2.7%. So very strong banking sector. Credit growth, it used to be 7 and 8% 5, 6 years back because of NBS and other crises. And for a developing countries, credit is actually like an engine of growth. And now we are back, kind of close to 6%, 16%. Capital adequacy ratio, you need to have 9%, we are 16%. We are on a strong weekend. Digital payments, it's a revolution. Right. On an average, it's close to 50% growth CAGR. In terms of value, it is 15%. In fact, 75% of the world transactions actually take place in India. Every small piece of you go in the rural area, also you have a UPI. So it has not implications, let me tell you. But then it starts with the biggest reforms we have created. That is called Jan Dhan Yojana. Everybody getting connected to the formal institutions that ensure the applications of the nations. That is why the economy is getting formal. And the biggest advantage of getting formal is the policies are much more effective for the transferring the subsidies or making sure that monetary transmission actually works much more effectively. Every policy works through a formal channel, and economy is getting formal. So it is a good thing. Now, if you look at the external sector, current account deficit is close to 0.7%. Don't go through the composition. I can always answer about that. External debt to GDP, that's absolutely manageable. In fact, short-term external debt is less than 7%. We don't have to worry given the kind of leverage we have in terms of forex and other things. Trade deficits, it has gone down. Foreign reserves actually can cover 12 months of imports, and we are in a very comfortable position. Now, regulated and growing financial market, the capital market. In fact, India's capital market has been doing much better than all the emerging markets. In terms of all the indicators, research mobilization, etc., all that. Some of the indicators are given, you can always have a look at it. Insurance market, same, it's a upward trajectory, it's a huge number. Pension sector, so when you talk about either the banking sector for a developing country like India, the financial sector is dominated by the banking sector. You could take the other components of that also. We are doing very well. And financial sector, look all the prices in the in other countries that have happened. So the debt prices, current account balance, and all that. Somewhere, the financial sector of 2008, the global financial, which is only the financial sector actually the bubble is lost. So that is where actually we are on a very strong position. Now, when it comes to social indicators, yeah, I just spoke about the fiscal position, the external sector, and all the strengths, the macro fundamentals. Now, look at the social sector. The enrollment ratio, as was primary, secondary, and tertiary, what we see is over a period of time, it's improving. And total health expenditure, which went down a little bit, but started coming up. And the last one is sustainable development goal. It's basically multidimensional poverty. What it tells that in 10 years, 2013, 2014, 22, 23, almost close to 18% of the population actually went of the multidimensional population. And that amounts to 25 crore population. Okay, that's legal achievement. And it is how? Because all these grand social programs, whether it is food program, whether it is efficiency, bringing efficiency in delivery of public services, sanitation, food, electricity, water, these are all mega plants. So always don't look at the numbers that okay, it was X, now the number is not X plus one. No. It is the efficiency, it's the governance that ensures better delivery for the same amount of resources. I think overall we have done very well in terms of allocation as well as efficiency in delivery of public services. That is where actually what you see, the achievements we have made. 25 crore population getting out of the multi-dimensional poverty. That's an amazing feat in 10 years. Straight to the Indian economics, Indian economy, you see that IMF it tells that in the dollar terms it will grow something like 8.2, more than actually 1 year. And that's very much possible. Strengthening conventional trade indicators, most of the indicators you see, we are doing much, much better compared to other developing countries. And I think we get better from now. These are some of the perception-based indicators like Global Competitiveness Index, Global Innovation Index. Not only we are achieved in terms of grams, of course, earlier, you know, over a period of time, like we look at 3 or 4 decades, what happened is we used to move gradually, 1 or 2 ranks every year, but then we made a jump actually in the last 10 years, and quite a big jump. It's not only in terms of rankings, but look at one example I've taken that how Egypt doing business, innovation, and everything has resulted into the outcomes. And one of the outcomes is the startup. Look what has happened. The exceptional growth in 3 years. The total funding has gone up by 15x, 15 times. Investors by 9x. Incubators by 7x. These are the numbers. But it's probably we are going to take over in future as a startup. Now we are at 3. You never know. Going forward, it will make it up. Yeah. State of Indian economy promising market any definitions. If you look at the middle class that is going up, that's huge aspirational society. So it offers the best market for everybody. I think the investor to ignore the Indian market today, they would regret. In fact, it is an opportunity. I'm very happy that this event is taking place because for even Korean investors, they need to look at a bigger thing. It's not only automobile, it's not only electronics. There's much more at the Indian economy is offering, and they will have what do you call better opportunities to capitalize. If you look at all these indicators, actually, whether it is automobiles, manufacturing, everything. Of course, manufacturing is a mixed bag. We have done well in pharmaceutical, electronics, even computer appliances and all that. But when it comes to labor-intensive industries, I think we have done not so well. I think it's time for cost to capitalize because all these countries are aging. That's the first thing. And the cost of production has gone up. In fact, China and all these manufacturing giants, they have targeted the labor-intensive sectors, which have gone to smaller places like Vietnam, Bangladesh. They have very little bandwidth. They cannot manage. Not that actually they don't have the it's that they don't have market to offer. Now, what has happened to Bangladesh? I think the success story is over there. So things are going to come to India, and that is going to be good. Yeah, whether it is manufacturing, it's an opportunity when it comes to services. And currently we are doing good and we have the capabilities to do much good better. Whether you could look at the trade aspect, the digital enabled services that's growing much faster. In fact, lower income countries and developing countries, they are having better and higher growth in the growing market. And services, we know what is the big story. And we are doing well. I think we say why we will be doing much better. We look at the components of the services. It's only the telecommunications we are getting higher share, which is 8% share in the total world imports. But travel, transportation, insurance, commercial services, business services, there are a lot more space available. Travel, transportation, it takes time. But then in other services, we can do certainly do better if we have done the IT ideas. Why can't we do it like in financial services, business services, and commercial services? Because the inputs required for this are not very different. Now, you see, I was asked by Purva to talk a little bit about, this US's trade policy and its implications in India. It's a big work actually I'm part of now, but which I cannot really give everything, but I can just summarize and tell you. What we looked at is something, I leave you the PPT so you can have a look at it. We looked at the tariff differentials between India and China. What it means is the tariffs India is imposing on US exports to India and US imposing tariffs on India's exports to US are 2 digits level and 4 digits level and 6 digits level. And the tariff differential can be created the scenarios. What happens if the responsibilities are split between the two parties? Suppose the tariff differential is 10%. Whether we are ready to reduce 5% on their and we allow them to increase 5% so that the responsibilities are split. Now, we see that one scenario. We also see the scenario where we allow them to increase. We don't bother. And also the other scenario that, okay, we reduce it. Because we are importing anyway, we don't have that kind of capabilities in certain sectors. So it is fine whether we import from China or we import from US. Right. But at least our exports won't get exposed to higher tariffs because that is where they will be really looking out to the competitors. So it's a very meticulous in details, but I will summarize. So this is where we landed. Let me tell you the US trade policy has proposed what is called reciprocal tariff structure. It is not going to affect India's exports much. In fact, it is much more beneficial for India if you really account for the kind of tariffs already imposed on Canada, on China, and if it's kind of backtrack, but even if they're going to do it on Mexico, what it says India is better off in six categories. I'm talking about the top 10 exports to US. Okay, here it is top 10. Okay, that to this, which is something like close to 85-90% of the trades. What we see is it's only four categories. Yeah, it's only four out of 10. We would face some challenges because what happens is here is we are giving you the competitors. Who is the competitor in US market and how much US is imposing there? And most of the categories actually our competitor is one of the three that President Trump is imposing, whether it is Canada, whether it is Mexico, or China. So more or less, there is actually nothing to worry. In fact, we are going to get at two-digit level, at four-digit level, of course. And we have little leverage given the strategic partnership and given all the relationship we have with the US. Some sectors, such as pharmaceuticals, agriculture, automobiles, some of the biggest sectors, you need to really strategically negotiate to minimize the damage. And some of the other sectors, I think India sends US imports something like $3,200 billion. Ours is $90, less than 3%. So except couple of categories where we need to be careful. All the others is 0.3%, 0.4% of the total imports in that sector by US. So they don't mind giving that leverage because there is a bigger leverage they need to capitalize. That is in India being the partner. So there is nothing to worry. In fact, product by product when you look at if it's substance, something like 25% of tariffs on Canada, Mexico, or 20% in China, we are going to benefit. But they capitalize it. Okay, it's like, sorry, I should not like to talk more about it, but more or less, let me assume that India is very well there. Yeah, here is like one small devil will tell you. This is the what is called top imports of US. And then the three countries, China, Mexico, Canada, their presence in the world market, their presence in the US market. The last column it is showing the real comparative advantage of India in this top 10 products that are imported by US. What it says, it's very simple. India's share in these top imports of US is very negligible. But India, on an average, is doing very well in the world market. So we need to explore there is untapped potential and we can have much more and more so. Once it puts us in a favorable position after that is imposed on Mexico, Canada, and China. Now, what do we need to do? These are the things. Direct rationalization. I think that's absolutely necessary. I think anchor investors, if you don't get the supply, you get the MNC and MNC has their actually, their component partners and all that. So they would like to come as a whole. So you cannot have what you call different tariffs, different types of rules regulations. And it's a time if China has done so well, they got the American supply chain to China. So we need to really make an effort to ensure that we get the anchor investors and also allow them to come on their supply chains. In this participation in global value chain, it's almost like very negligible 1.8%, and 75-80% of the world trade happens through the global value chain. We have the potential because there is highly uncertainties around all these big supplies. India is one country, the trusted partner, and it goes well to everybody. In fact, I think I don't know the diplomacy, but I think we have done extremely well during the most difficult times in managing relations with almost all partners. I think so you very just not giving for that. As a student of economics, I feel I too went down on the floor. Anyway, so but there is something that China plus one because all the things are part of the global value chain, if US puts something on China, it increases the cost of production. It disrupts the whole supply chain, the ecosystem of that product. That is where the when the companies won't be very comfortable. In fact, in the earlier period, the fast democracy from countries also, there are competition MNCs. They're trying very hard to relocate, to diversify the supply chain. And which is the conflict with the environment, market, and everything. That is indeed. Okay, so that is where I think we need to capitalize. Efforts to trade balance, I think, yes, great. We are importing anyway. That's why that we need to really reduce tariffs and allow illicit high. And continuing domestic factor markets, we have doing this trade facilitation. I can go on speaking hours actually on this. And I can also tell you that the government of India is taking the biggest initiatives actually during last 10 years. And it's consistently going on because it's a very diversified economy. It's a federal structure. It takes time, taking policy and implementation. It's always in that. But it is an operation. Some people might get and make ideas successful against when the tendency is hugely successful in certain sectors. It's not so in few sectors. So it's a very important for us. We need to focus. So we need to sustain all these structural reforms. Uh, this is the last price. Sorry, don't like it. Yeah, I know you're very. I just quickly. This is the uncertainties actually you need to be very careful. Let me not explain this. This is where I wanted to spend maybe like 3 4 minutes. Geopolitical crisis, you know what is happening. We need to be ready to go. Trade and investments, it's a type of protectionism. I can also index of trade, investment, and everything. So we should be always ready. Lack of macroeconomic consensus. What is happening to all the multilateral, whether it is UN, WTO, WHO, this is, G20. When it comes to macroeconomics, with developed countries, they wanted to go over actually stimulus. They could go the way because they have the international vision. Currently, we support. They can have if there actually the policy of title monetary policy that is can control that outflow is taking place. We do be careful about the what is less sensitive. In fact, many of the countries they find it very difficult to manage because they got this growth of that in the dollar. So more or less that's lack of macroeconomic coordination. So that is where India is very well placed because we do have the strong fundamentals to absorb this source. Frontier technology, that is something which is quite beneficial, but that is also disadvantage. Okay, so we should be really ready for it. It's a big topic. Some other time we will speak. Climate crisis, everything, whether the CBAM, the IRA, and all that. These are creating a lot of pressure. The world has grown and then grown on it, what you call carbon intensive growth. But when it comes to developing countries, though our per capita emission is one of the what you call middle of lowest. But we are committed, we are doing very well. But the additional resources that are required to what you call to go for the climate actions, the proactive climate actions by the other countries is quite huge. It's 2 to 3% additional investment required for HANA. So that is where actually, and we have a developmental priorities. That is also going to be one of the, what you call the factors we have to care for. But I can only assume that we are really in a good position to handle all those. Thank you so much for your question.
Uh, the minister is not here, but I do want to show reciprocate his ability to speak in any language quite fluently, and I say so that we also love Korean movies and Korean food in Delhi. The Crash Landing on You was one of my favorite series. But so without further ado, back to the numbers. And I've been given 10 minutes. And the best part about coming last is everything that has to be said has been said before. So I don't know how much validation I can do to your knowledge, but I try my best. And I have a slightly more inward looking presentation where we look within India to look at the uncertainties. I kept it to the minimum 10 minutes. Again, some of the numbers you've already seen for the last two presentations. So here's the same number that Dr. Sahu and Dr. Shivanta showed you. This is the GDP growth rate from 2011-12 to 2024-25. And we have done remarkably well, except that the GDP growth is forecasted to slow down to 6.5%. Um, is that a cause for worry? And I want to show you the same numbers for quarterly, on a quarterly basis. And this is from the last 3 years. We want to show you, yes, there was a slowdown from 23-24 quarter one onwards to the second quarter of this fiscal. But what we see is that there has been some recovery in quarter three. So, yes, then while the overall aggregate number, the overall annual aggregate number shows a slowdown, what I do want to emphasize is that I think the cyclical slowdown has turned around. But and this is a recurring message in the presentation is the recovery is a little tepid, and we still have it's not as rapid as we would like to see. I want to just focus on the three key sectors in the economy here, agriculture, industry, services. Why is agriculture important? While it only contributes approximately on 15% of GVA, gross value added, but it does employ around 40% of the workers. So rural consumption does drive the FMCG, the fast moving consumer goods category. So we always look at agriculture in the when we look at numbers, and what we find is here on the left hand side you have the annual numbers, and on the right hand side you have the quarterly numbers for the last 2 years, 2 3 years. What you find is that agricultural growth has been quite volatile. But last year it's at 24-25 is supposed to be higher on the higher side of 4.6%. And you can see that in for the quarterly data that where the third quarter is forecast is estimated to be 5.6%. The idea is agricultural growth is going to be pretty robust this year. Um, and if you look at the forecast, also the rainfall is for 25. The El Nino La Nina factors are quite benign. So we would expect a normal monsoon. And even because we had a very good monsoon over the last few years, um, we show that the areas sold for our crops in this time of the year, the Rabi, what we call the Rabi season, is also quite robust. It's higher than last year. So agricultural growth is estimated to be robust. When we look at industry, I want to say that when we look at industry, I'm combining four sectors: mining, manufacturing, electricity, gas and water utilities, and construction sector. What we find is that this is where the challenges, the industrial growth again has been quite volatile post-pandemic. When you look at the manufacturing sector in specific, again, these are the annual growth rates, real growth rates. What we find is, again, manufacturing growth rate has also been quite quite volatile, and it was the manufacturing slowdown in the manufacturing growth rate which slowed down in the economy. At least was one of the major contributing factors. Again, when you see the same data on a quarterly basis, what we find is we are through the worst, and in quarter three, we see a turnaround. The turnaround is not as rapid, uh, but there is all the numbers are suggesting towards a turnaround. How's quarter four supposed to be? When we look at the index on industrial production, again, the numbers are till January. What we see is the same recurring phenomenon that we have been to the worst and we are turning around. The point which Mr. Shumanda sir, Mr. Chaudhary pointed out in the beginning, till January, you're still okay. We don't know what will happen in the next 6 months. And that's the challenge of
of how everything plays out, the global uncertainty plays out, that we don't know. But so far, the turnaround so far has been a thing. Um, the one point I do want to point out here is that even if you can look at the next industrial production, which is monthly data across other types of categories of primary goods, capital goods, so on and so forth. The one concern is the consumer non-durable goods, which continues to show weak growth, index of industrial production, and sometimes it's interpreted as also that is it a weak consumption story. Now, consumer non-durables is your daily food, clothing, type of thing, and where that is weak growth. Are there are some weaknesses in the economy? It suggests of that, and we need to be careful as we go forward. The third major sector is the services sector. Again, you have the growth rate, and for annual and quarterly, here also see we see the same thing on the annual basis. There is a slowdown, but on a quarterly basis, we see that we are we have made a turnaround. When you look at it across the subsectors of services sector, which you have heard, the IT, the so on and so forth, we see again the same thing that uh, we are turning around. At least we were turning around again, but the growth rate is not as it's lukewarm, but still the turnaround is there. Um, of course, what does that mean for the future for quarter four? January's may hold up to be robust, but it's the uncertainties really start seeping in from March onwards when all the policy changes started taking place. It is something Dr. Sahu also talked about, and even Mr. Chaudhary, the same thing in numbers. What about the demand side, the expenditure components of GDP, what we call as G, government financial expenditure, private final consumption expenditure. And we can see that the same things, the things are turning around, but still tepid, still quite warm. And imports, as we know, in any open economy, imports are export exports are linked to imports. So that weaker imports is also signal that there are underlying weaknesses. So we need to be careful about how we interpret the import figures. Um, and I do want to point out that the gross fixed capital formation, which is a measure of domestic investment, it still continues to be um, weak, still weaker than it used to be. So we need to, it's very, very important that foreign direct investment and domestic investment pick up in the economy. And this is a recurring theme that what else do we need to do to get the domestic investment up? Uh, Government final consumption expenditure after many quarters has shown some strength in the quarter three, and I think that's a positive news. And expectation is that it will continue to be in the fourth quarter. But of course, already we know there are underlying weaknesses like the weakness exhibited by the IT sector in Bangalore. There were some news reports that how the layoffs have affected the housing sector because suddenly there are not enough people renting out spaces in Bangalore. So these interlinkages are very important to measure, and we need to be circumspect as we go forward. The trade data, I think Mr. Chaudhary and Dr. Sahu has talked about more in quite in detail. Merchandise trade deficit continues to widen, whereas services trade surplus continues to widen too. So I think this is something to this thing we are doing extremely well in services trade. And here I just want to point out, bringing the skills story because I am currently working on skills a lot. And I want to point out that, one of the things, advantages that India has is business services or IT services, even though it's going for a cyclical slowdown. The thing is that these sectors, if you look at the numbers, they are almost all the people going into these sectors are the educated people, the technical people, all the technical people with technical degrees, like the engineers or the highly educated people are going to the IT sector. So while the services sector continues to be very dynamic and a driving force in the economy, are they creating enough jobs for the larger workers in the economy. And they are creating jobs for the highly skilled workforce who are highly educated with a college degree and above, technical degree and above. But are they creating jobs for the larger mid segment of the economy? And that's where the manufacturing sector becomes very, very important for India because they have a larger employment multiplier. So it's a great it's this fine balance that we have to walk through to not only have high growth but also create jobs in the economy, appropriate jobs with appropriate skill sets, both on the demand and the supply side. It's a challenge that we need to make through because all the demographic opportunity is an opportunity if we can only convert that into a dividend if you're actually able to skill them appropriately for the jobs that they need. Um, a similar story here with non-petroleum and non-gems jewelry exports. We are doing quite well. Um, the exchange rate has been for several points, and it has depreciated quite sharply. Our foreign exchange reserves are although it has come down since the highs of last year, but still it is relatively safe. We're in a safe zone. Portfolio investment has been quite volatile, which is probably why the exchange rate depreciated, and foreign direct investment has also fallen. So here are the heat map that some of these slides are from what NCR produces in its monthly economic review by our macro team at NCR, and these heat maps tell us about where all the lead indicators, as we call it, where are they going, and a lot of yellows indicate that things are not things are improving, but it's just the pace of improvement is slightly slower than this is slow. And the good news, so the bad news is the last slide here is on inflation. The inflation right now, our inflation is quite moderated because within the inflation target, um, but and that also gives us an opportunity. Is it does that give an opportunity to probably cut interest rates further to boost economic growth as the inflation rate stays moderate. But that aside, I do want to show you something, one last thing, and it's a point which Mr. Chaudhary and I mean Dr. Sahu has repeatedly identified, is the increased uncertainty. This is something NCR does with its business expectation survey that we survey firms around in the six major cities. We've been doing it since 1991 and on a quarterly basis. And what we find is that there's as you can see, it's very volatile. So the uncertainty is quite heightened for the last couple of years. Um, and when we look at the even the components of what goes in the business component, BCI Business Confidence Index, what we find is that while the future sentiments are still, though they show signs of improvement, but they're still quite muted. Um, so what we want to say is that while things have improved in quarter three versus quarter two, but these signals tell us that the 6 months outlook are going to be cautious. No, and especially it becomes given the developments in the last 2 months, things even more become more challenging. On that note, thank you.
I hope it's loud and clear. So first of all, I think I just want to thank KIEP for inviting Shinhan Bank. It really means a lot to us. Okay. It really means a lot to us. Thank you so much for that. I think coming as a fourth speaker with a lot of macro numbers already out at your face, I think some of us will be physically here, but I think mentally exhausted. So I would not take much time, but yes, what I want is first to thank individually each one of y'all because in your respective fields, you have the power to contribute to the growth of India as well as Korea, as well as a collaboration. So let's have a huge round of applause for yourself and to each other.
I actually wouldn't hear any of the class. If we can have a longer share, guys, come on, yeah. So I think it just I am getting some attention back as well. I hope so. So let's begin today's session. So there are decades when nothing happens, and there are weeks or months when decades happen. Risk never comes knocking the door, and in financial markets, things often go wrong more than they go right. So, in the present thaw of volatility, I think it's important to do housekeeping and strategize ourselves in terms of navigating and eliminating any kind of currency or interest rate risk. So, I would first like to tell you what we are here for. If I can just do this in a Okay, so we'll quickly cover these things, but the best part about this presentation will be we connect the live market into scenarios where you can connect with the actual market. So starting first with the FPI flows, which are the hot money, which is not sustainable money. It can go faster. So for India, the net FPI inflows were to the tune of 2.37 lakh crores for 2023. Then it moved slightly lower towards 1.65 lakh crores in 2023 from 2024, sorry. And in 2025, till date, the FPI flows have been negative to the tune of 1.1 lakh crores. So considering that, we are still optimistic because usually what we have witnessed, considering the macro picture, which we'll be discussing, the second half of the year will be contributing to a higher FPI flows. And why we'll obviously explain that. But the reasons why the flows went negative are obviously one, the elevated valuations after the COVID period. Obviously, if you talk about several sectors, they have recorded huge numbers, and then obviously there has to be a cool off period, so there was some elevated valuations. Secondly, there was stimulus announced by China, so a lot of flows did go for some extent to China, and then obviously moving back to several countries again. We obviously had the geopolitical issues, particularly Iran, Israel, which obviously created some risk of scenarios. By risk of scenarios, I mean money moving out from the riskier assets like equities. And as we discussed, now we think we will be positive in the second half because of higher capex, because of the budgetary announcements. The consumer demand revival is what we are seeing because of the cooling off of inflation, particularly food inflation. So it gives more leeway, as ma'am rightly said, for boosting economic growth and for interest rate cuts coming higher. Moving next is the FDI flows. Yes, somewhere I think this is where I think India has to focus more on. And if I talk about the FDI flows, we are at the tune of $1.18 billion. So I think that's where the concern remains. And the reason why this FDI numbers have been lower is mainly because of the rise in repatriation and overseas investment by Indian firms themselves. So if you put this in the number, the repatriation goes to almost around $44 billion for the first 9 months from $33 billion. And even if I talk about the overseas investments, they rose to almost around $17 billion to roughly $11 billion. So huge rise in those parts. Major sectors which contribute to the gross equity inflows are, as rightly expressed, the financial services sector. Manufacturing does contribute. Communication services remain an important part also. And major regions, Singapore, Mauritius, UAE, Netherlands, and US, are the major destinations where the 75% of the flows come from. If you talk about trade deficit number, we recently had a trade deficit number day before yesterday. In fact, the narrow number trade deficit number, it came in at a number of $14.05 billion, which is the healthy side, I would say, and the lowest since 2021. So the narrow trade deficit number is good. In case if we see a widening of the trade deficit number, it definitely puts pressure on the current account deficit number, as well as in turn raises the borrowing cost as well. But now, because we are seeing a declining trend, though we anticipate this declining trend may not sustain because private consumption may start rising. So obviously it could be a one-off number. But if we talk about the specifics, the exports didn't rise that much. It's only to the tune of 0.1% for April 2024 to Feb, which is the recent data, while the imports were up to the tune of 5.7%. So this dynamics of export imports needs to obviously be closely watched out. Yes, we run a trade surplus with US, and thus I think Donald Trump has been very clear that wherever they are running deficit with whichever country, Mexico, Canada, India, they want to go for the standard part. So we'll discuss that in detail. But as of now, as some of the participants and speaker did talk about that the tariffs which we impose on US, the average number which I have calculated comes to around 9.5%, which we are imposing as tariffs on US.
While if you talk about US, they are imposing an average just 3.5%. So definitely there remains a chance of correction or a tariff increase or some kind of collaboration in terms of tariff, which we need to think of because it can obviously come to India as well. The GDP trajectory, we did rebound to 6.2% in Q3 FY25. The last number was 5.6% in Q2 FY25. The expectation for FY26 from our side remains around 6.5%. For FY25, around we close on the average at 6.3%. So growth obviously is driven by the government capital expenditure, and again, we will not go into detail, but the discussions were on the same side on the positive trajectory which India still continues to hold. GDP is expected to improve year more because the rural demand has been increasing. We also had the Mahakumbh, where these events do drive the consumption growth for India. So I think that could be a major contribution. Plus the falling inflation will also lead to higher growth. So that's our projection, where India still stands to be the fastest growing economy. And still, I believe because of such events and the flow of events which we are expecting will continue to remain so. Inflation dynamics, as ma'am rightly said, that we have seen the inflation moving lower towards 3.61%. Major contribution to this lower inflation has been the food inflation because of that cooled off to 3.75% from 6.02%. Even within food inflation, if we break down into vegetable inflation, they turn negative 1.07% from almost the number of 11%. And pulses inflation get also cooled off. So major food inflation was a major contributor to the lower inflation. But I want to mention one thing: the core inflation. The core inflation, in fact, has stayed higher this time, where people are not talking about, which can remain a concern. But overall, if you talk about this range which RBI wants to maintain, that is an average of 4% plus minus 2% margin. So basically, 2 to 6% is where our inflation is. And even in the coming quarters to come, we think this inflation numbers may have an average of around 3.8 to 4.2%. So it is very, very comfortable band for the inflation front. What are we expecting? So as we are discussing, we'll connect what are our projections for the future. So first, our projection was saying that we see a 25 basis rate cut. It's a personal opinion by RBI in the April policy. Major reasons can be obviously inflation dynamics cooling off. Growth numbers did come higher, but as compared to projections, the growth was lower. Though we have compared to the last number, but I think it's more important to compare with the expectations rather than what the last number was. So that's the reason. Plus, RBI has been very, very proactive when it comes to the liquidity management. They have done recently buy and swaps for $10 billion a couple of times for 3 years. They have done OMOs. So they know that there is a liquidity crunch into the market. There has been GST tax outflows, advanced tax outflows. So they need to consider this liquidity management. And while the new governor coming into which Mr. Sanjay Malhotra, I think personally I believe he's taking the right steps to manage the liquidity, considering the outflows which may have. Two factors will be important for the rate cut after April. First, the GDP number for Q4 FY25, which will be published in May 2025. That will be an important point to understand that would there be further cuts or no, apart from the global factors. And declaration of RBI dividend. So usually this RBI dividend is, RBI gives dividend to the government. So it's usually announced in May 2025. Our personal expectation remains that the dividend could be to the tune of 2.5 to 3 lakh crores. That's what our personal estimates are on that, which will further add to the liquidity to the system. So I think liquidity measures are quite very well managed, and thus we anticipate, and there is a room for rate cut. If you talk about FX reserves, India had so the all-time highs was $704 billion, which was in September 2024. We did fall from the all-time highs after the election results coming out in November of US President Donald Trump. Then the reserve dropped as low as $623 billion. And from there, again, we are seeing a spike with the current levels of around $654 billion. So I think the FX reserves are an important chunk when it comes to the external debt also, because the way I understand is RBI also looks forward to cover the external debt, which is to the tune of $712 billion. And currently, from the highs of 704, we are at 654. So I think I don't see a very, very sharp appreciation in rupee, because if there is any kind of sharp appreciation in rupee, I think RBI will want to grab that opportunity in order to grow these FX reserves. So we will come to a view on dollar rupee very quickly. FX reserves at the current juncture with $655 billion, it covers 10 to 11 months somewhere in between of the import cover. If a longer average, if we talk about even 20 years, the average has been around 9 to 10 months. So we are very good in terms of our import covers. Uh, or RBI has been managing the liquidity. So we have seen a high of 87.95 of dollar rupee. And within 2 days of sharp intervention, we had seen levels coming as low as 86.24 and then finding an equilibrium around 87. Currently, if I talk about 5 minutes back, we were trading at 86.30. So we are definitely finding the intervention strategy very different by RBI. Earlier, governor used to manage it on a daily basis by keeping it in a narrow range. But now the new governor believes if there's an intervention, it should be sharp enough, which can impact the market at large. Now, on the global front, Trumponomics. So is there an actual plan or is there no plan? So what my analysis says that if he dropped out from the day he had become the US president, what exactly happened? On Jan 20th, he announced tariffs on Canada as well as Mexico. On Feb 3rd, he said, no, we'll go on hold as of now. On Feb 10th, he announced again the second tariffs of set of tariffs on steel and aluminum imports. But then on Feb 13th, he announced again tariffs on the reciprocal side. March 3rd, he talked about the first tariffs again, which were obviously off the table. And then after 2 days, he said nothing exists as of now. I'm giving you 1 month period, a put-off period for negotiation maybe. I'll give an exemption on April 2nd. We will discuss about the tariffs. So as of now, in reality, you know, these 2 months were more volatile and I think more helpful only to the media and the economists. But in reality, nothing has changed as of now. But why this is happening and why Trump is doing this? So my thing is there is definitely a plan. He's the same guy according to me. Why? Because first it's about to talk the talk. By talk the talk, I mean that Trump is very clear that he wants to get all the countries back onto the negotiation table, which never happened earlier during his earlier regime in 2016. Second, it's also important to understand the protectionist philosophy because somewhere he believes that he wants things to happen in America, American products to be promoted more, and via tariffs. There can be three more solutions to it. If you are imposing higher tariffs, the other companies who don't want to be part of this tariff may have to come as an FDI in US and open the company there. If they open the company there, it creates more jobs. If it is creating more jobs, it is boosting the economy at large. So the plan is very clear and dual. If tariffs, it grows tax revenues. Somewhere Trump had three important policies which he can clear off. One tariff, one lower taxes, and one is immigration. So out of which tariff remains an important portion because that can knock off the lower taxes in case if they are planning for. But I believe the lower taxes will be difficult considering the US fiscal deficit numbers. So I think immediately that may not be on cards. Fed rate trajectory. What are we eyeing for the Fed's perspective? We had the FOMC policy yesterday itself. Obviously, it wasn't sync with expectations, no rate cut from them. But they were very clear that even the Jerome Powell speech, which was at 12 o'clock a.m. In the morning yesterday, they were very clear about one fact that we also are not sure that what kind of impact these tariffs will have on inflation, even in US. But they were of the opinion that yes, two rate cuts are still on cards. For us, maximum of three cuts for the year and minimum of two cuts for the year is what we're expecting because personally we believe that these tariff things will continue to flow in. But somewhere they are also struggling, economy is slowing, the CPI rate has been over to 2.8%. Consumer spending has also softened. Vehicle sales have declined. Only one positive factor for them is the job growth is still better off. So I think that is the only positive. Rest, I think they are still suffering, and I think there can be rate cuts. The terminal rate, if there are two rate cuts, we see around 3.9%, and if it goes to three rate cuts, which remains a bit aggressive, then around 3.62%. That's what the Bloomberg estimates as well. Let's come back to the dollar index and dollar rupee to sum it up. But lastly, when we were talking about tariffs, one important thing is also on India. Maybe we discuss that also. So, in numbers specifically, our exports to US is roughly around $80 billion. In terms of percentage, our exports to US is around 18%. Our contribution of this 18% to GDP is around 2%. Our imports from US are only around to the basis of 2%. The differential, what we were discussing on the tariffs is we are having higher tariffs on them rather than they having higher tariffs on us. So definitely it's a thinking point and they will obviously come back to us. When and how is important to understand. Second, would they come with an India tariff? Would they come with a sector tariff? Would they come with a product specific tariff? Is what we need to consider because that can create an impact which can be different from all three scenarios. Coming back to dollar index, recently, obviously, a couple of months back, we had seen dollar index moving as well as towards 110 levels, which sharply cooled off towards 103.30 odd levels. Even in January, on November 6th, we had seen these levels tested. So, our personal take in terms of the number is there can be a possibility that we can test 100.5 or 100.60 as a support, but we are not eyeing it going below those levels at this point for FY26. And immediate resistance on the right side acts as 106.24, which is nothing but on the technical analysis as 50-day exponential moving average. Uh, Moving to the outlook on dollar rupee, very clearly, we anticipate that India's growth story remains intact. Inflation is in our control. The Chinese yuan, where we are directly, attached in terms of dollar fee also, the Chinese yuan has been cooling off to 7.2, 7.23 roughly. 7.35 is a decadal highs. Dollar senior spread did try to touch those levels, but it is not touching and it is just cooling off from those levels. So I think that continues to assist. Brent crude prices have been, assisting us because it definitely helps on our fiscal math at around $70 per barrel, which is the near lows which we are seeing in a couple of months now. Uh, Downside filter 86.14. We are already at 86.30 today. That's the first important level and support for which was in January 27, followed by 85.40. So the broader range, we still expect depreciation of rupee. On a 25-year horizon, we have seen the CAGR depreciation has been to the tune of around 4.3%. But because the interest rate cycle changing, this depreciation may be to the tune of 3.5%. So the broader band for dollar rupee, we are expecting 85.40 to 89. So uh, also, I have just taken an outlook of FY26 of other institutions, and this is from the Bloomberg consensus. The median range, the high range, and the low range, what other institutions, around 40 institutions expecting, and some of them we have highlighted what their consensus is. So there are probabilities of other institutions expecting even 92. That's what we are not expecting at this point in time. And the lowest somewhere is the 85 expectation from the broader institutions. So that's from the economy side. I would like to conclude by saying a couple of things. One, obviously, when you go to a casino, it's like when you're out of the chips, you're out of the game. Similarly, when we talk about the analysis and we talk about the hedging portion, we have realized that when and how to hedge is extremely important. What we have observed is either the corporates are completely falling with their chips or maybe acting as a speculator waiting outside and they're saying they still win. So that's not possible. So the important understanding here is one needs to have active risk management policy in the picture. Does not buy any level into mind and strategically keep on hedging by not having any kind of passive strategy in mind. So that's important. And lastly, I want to conclude by saying to this forum that a pessimist is one who sees difficulties in every opportunities. But people who are present here, I believe are opportunities who would find are who would find opportunities in any kind of difficulties. Thank you so much, everyone.
Then machine tools 100% automatic. Food processing industry 100% automatic. Construction 100% automatic. Electrical equipment 100% automatic. Then broadcasting 50% automatic. Beyond that, it is government approved. So I just want to say where your companies are coming to India, most of them is under automatic route. And where we have certain governmental caps, we are trying to give all the requisite license within the period of 2 to 3 months. You can also see that this is how your money is getting spent across the states. Now, why I just wanted to inform you is that we should now start thinking beyond. We have approximately 14 Japanese industrial townships. I think I just met someone from JICA here. So you can also start thinking of having townships dedicated to you for your taste of food which you want, your industry, your hotels, however you want to do it. Make a proposal. We are all here to help you also. Think beyond. And for that, NICDCs are a good option. That is National Industrial Corridor Development Corporation. That is a good option wherein a group of companies coming together start working together. I just now met from the person from Shinhan Bank. He informed me that Korea has, I think, Shinhan Bank. So we have 6 branches over here in India. So that's a very, I say, good step. But rather we should start thinking in which all state we have not gone. If we start thinking about it, because India is a diverse country. If you see my eastern part, it is totally metal rich. We have coal, we have aluminum. You name the metal that is there in Orissa, Jharkhand, Chhattisgarh area. Similarly, as far as industrial area is concerned, you go south, Tamil Nadu, Karnataka, Kerala, and Andhra. They are good in ease of doing business. Financial capital, Maharashtra, you are aware, Bombay is there. So across the spectrum, where your company wants to go, you just make a plan accordingly. And from our side, as I said just now, we are planning for a bigger thought of doing matchmaking with MSMEs, doing matchmaking with any business enterprise you want. Our investigating team, I think after me, she will be telling which all companies are already there. I also would like to request the organizer of KI-FEIF that if we are able to create a sort of system wherein those MSMEs from Korea or those industries from Korea with their demand, what they want, if they can tell us in India from government side, we will try to identify those MSMEs, those businesses, because I have CIA with us over here. So we will try to identify your requirement and then we will try to match with it. So that it will become very easy for you. So since it's an, I say it's a forum wherein we are thinking for beyond. So I just want, if we start working like this, if from Korean counterparts, if you tell us, what do you want from us? What is your problem statement? What are the things which you are manufacturing in your country which can easily be manufactured here and which you are ready? You are ready to take our PLI, you are ready to take the benefit of our manufacturing mission. So you just plan accordingly, plan with the name of companies. Invest India will reach out to each and every one of them. Why I am saying, because this is what we are working here at DPIT. We will reach out to each and every one of Korean companies. Simultaneously, my request to this particular organizer of forum is, we will also want that if Indian MSMEs are benchmarked, that these are the MSME, because once I know your requirement, I know where my MSMEs are. I can also guide you by stating that please go to this area for this particular thing. I just want to say that suddenly there is rise of Ayush thing, that is Ayurveda, world over people are talking about Ashwagandha and all. So where we will get that Ashwagandha? In forest area, which is in MP, Chhattisgarh, Jharkhand, Orissa. So what I just want to say is, your demand and our plan, if we do the matchmaking, we will be able to get more out of this particular forum. Now this is the reform which Government of India has taken successively. I just now said almost everything is under automatic route, except few which are under government approved route. Even in that, we are approving the files within a period of 90 days. You don't have to worry about anything. And this is what we have done in last 2 to 3 years. Under ease of doing business, we identified 52,000 types of compliances which industry had to comply with. And I must tell you that we reduced approximately 42,000 of the compliances. So it's a dedicated effort by all the departments of Government of India, wherein we are reducing the number of compliances. You can see that Government of India has also come up with an act called as Jan Vishwas Act. So if you feel that this compliance is a burdensome on your industry, please tell us. We will do benchmarking study, we will identify from across the globe. If needed, we will reduce that compliance for not only for you, it's for all. So what I just wanted to say that it's the right time to think about India because somebody from Osaka met me. I'll tell you this story also before I conclude. So he said in 1990s we were looking towards China, and they took 10 years. Within Osaka, there were so many businesses who ventured in 1990s, and few of the businesses who ventured in the year, let us say 2001, 2002. So those who were early gainers, they have earned fortune like anything. Now this is what India is at. So those who are early bird, the price which they will be getting by 2047 will be humongous. So it's the time of India has come, and think beyond. Since I have to leave, my request is this, if anybody has any doubt regarding FDI policy, FDI thing, you can ask. Thank you very much.
We appreciate that you are taking for us to appreciate. He has
loss that we have if we investor dispute settlement system. What we've done in the case of UAE, for example, are we going to expand it? Because what we had done earlier was a very retrogression step, number one. Number two is, you talk about demographic dividend. And demographic dividend is fine in the event that you're able to create those job opportunities or business opportunities. What we find is that, it's not expanding in the same rate as the population growth is in that category. Number three is that a lot of these issues have to be dealt with by states, and you have not thrown any light on that, in the sense that are any of these issues that you're talking about, are they being distilled to the states? Are they going to be replicated by the states? For example, BRAC. Now, BRAC, of course, states are engaged with. But what we spoke about the regulatory reform, it's actually deregulation, which is a very, very major step forward. And I hope we can bring. How will this? Are the states responding to it? Will the states be able to respond to it? Will they be able to comply with it? See, but they all, in our own work experience, we found are very big problems for not only foreign investors but even domestic investors. Thank you.
So thank you, sir. Like I'll answer last, whether states are in tune with us or not. States are very much in tune with us. Government of India has this year formed a high-level task force for decriminalization and reducing compliance burden. 14 secretaries of Government of India are already there in the task force. In fact, as we are talking now, 2 or 3 secretaries are there in the states discussing about ease of doing business. While we are talking, because incidentally I look after ease of doing business also in KI-FEIF. So 2 to 3 secretaries are there in the state talking to chief secretaries and all the secretaries how to ensure the problem of business is dealt with. Now, as far as the relation between India and Korea is concerned, recently in the month of December, if I am not wrong, in the month of December we had a FTM with them. FTM is a fast track mechanism. We invited the embassy of Korea who was there in India. We requested them to call all the businesses who want to come and share their grievances. We received approximately 12 to 14 major grievances which they had. We listened to them and we ensured them we will solve it. So try to understand, as far as the international forum is concerned, for them we have FTM, we have MOU, and once the MOU will come in place, we will have inter-ministerial discussion of Korean counterparts with those of our ministries, so that whatever is the concerns with respect to state are dealt with. So states are very much aligned. Second is the issue of demographic dividend. You said that the result of demographic dividend is not seen. Let me tell you, sir, from Taiwan people came and they said they need 1 lakh people. From India, I will not tell about Korea because what they told us, from Japan, they told us they want more than 50,000 individuals who can work there. Korean side, they also told us that the semiconductor engineers who are working in semiconductor industry, we have the best brain of the world. I hope you are aware of it. So this is the demographic dividend which I am talking about. I am also saying if you see the 1.6 lakh startups which we have in India now, and every day number of startups are going ahead. We will be having Startup Mahakumbh, I think shortly in the month of April. That time you see the power of those startups. Last year when I personally saw the power of startups, I realized the aspirations of our people. So demographic dividend is indeed coming. Government of India has started manufacturing mission. We have also started PM3 program wherein we are also incentivizing. In fact, many of the Korean companies, I tell you this also, they are also giving, what is that, internship stipend to our people. So I just now said we have 14 Japanese industrial townships, specially dedicated to them. We have 20 nodes, specially dedicated to industrial area. Apart from it, we have India Industrial Land Bank, wherein they can see sitting here, if I want to invest in Maharashtra, where will I get lands? So all that has been done through our BIA exercise and this. Finally, as you asked me about Korea thing, so we have MOU with them. And since at higher level we constantly meet with the ambassador, sir, we meet my equivalent, Mr. Choong, first secretary there in Korea, so we keep on meeting. So as such, whenever there is issue, we try to solve it.
What about dispute settlement?
That's what I said now. For dispute settlement, we have FTMs, fast track mechanisms. So in those fast track mechanisms, we need to understand there are certain issues which are of strategic importance to our country. For example, issue related to GST. Now every business will want that it should be subsidized to 0%. But for that we do international benchmarking. You know what is happening across the globe. So we follow the global standard. We don't distinguish between whether the investment is from Korea or from US or from Africa. We don't distinguish. For us, if GST is there, people may come and tell us, we solve it. So there is, from Korea side, we had a dispute wherein the boundary wall was broken by someone in Andhra Pradesh. We coordinated with the chief secretary and directed them to pay the compensation. So this is what I am saying for dispute settlement at highest level. Well, Joint Secretary is heading and Honorable Minister is always available for any such issues. Any other?
Looks like India is making these strides because there's a huge shift from China towards India because we have the biggest manufacturing base and also we are connected to Europe. I'm Simar Suri. I'm from a law firm called Suri & Company and I lead the international practice. So part of my work involves, I advise the Kotra and the Korean Embassy on small and medium businesses that want to come in and set up here. Now when they come, we advise on the legality of things where they face an issue, and I'm sure you are aware of this, is that they feel that the access to ready information and thing is they have to go through a lot of hurdles to get to get direct information from the government. There's a little bit of mistrust there because also when they come in they want to know what do we do. So we help them and handhold them through all of their issues, including visas, employment and labor, corporate structures. When they want to know specific information regarding which industry will be set up in which state and where they will get the maximum benefit, what is a good way to have them interact directly?
It's an important question. See, we have NSWS with us. Korean desk is there. So who is he here? The guy from Korean desk. Acha, so Korean guy.
Mr. Im,
Who is that?
Mr. Lee,
Mr. Lim is there.
Mr. Park.
See, so now what mechanism we have is, it's a totally corporate structure. There are no officers. We have Korea desk, Indian people sitting there. I also have Korean people sitting there. So day to day, if there is any issue, this desk is able to solve it. So what they are doing is they are meeting Korean counterparts, they are addressing their issue. If they don't get to understand how to solve, they reach out to us. Now the specific question you have asked for MSME, see why I am saying that the future lies in the hand of MSME. So the more MSME comes here, we should ensure that they have a good matchmaking. Because one important thing is it should not happen that MSME from Korea matches with MSME from India, and this MSME from India, it defaults.
Absolutely. So,
So if it defaults,
yes.
it will bring badly to us.
So you're absolutely right. In fact, in 2019, our law firm had facilitated an MOU with President Moon there at the investing event only between Bank of Baroda and KB Bank with KICC. However, post that COVID happened, and it's not that Bank of Baroda was a bad party. It's a pretty credible bank. It's a good bank. The facilitation also happened. It was just unfortunate the timing. But I feel like you're absolutely right in terms of the correct time and hand-holding which works. So I'm happy that you've pointed this out so then we can collaborate and
We all of us should collaborate. That is what, see, madam, I just now said it's a forum where we should think beyond. Instead of a speech type forum wherein I am only giving rhetorics, I expect that we should work. And I will reach out to the organizers again, whether you have the task which I have given just now, you have done it or not. So it is tough task for organizers. I will reach out to them because we should identify, we should start identifying now. And once we are aware, my team is there, they will reach out to everyone. They are doing cold outreach, hot outreach, email outreach, roadshows outreach, they are doing everything. So you just tell me what you want, we are there, sir. Anything else, sir?
Okay, I think it's the
who invite me here to share my views. All of you have been sort of bemused by numbers, last. And I'm not going to use any PowerPoint. I will speak in English, not PowerPoint. I find that very restrictive as well as unrestricted at times. Unrestricted to understand segue from what was spoken by the Deputy Secretary from the Department of Public Policy and Industrial Policy and Internal Trade. The point which he spoke about was on a Committee on Regulatory Reforms. This is one of the latest things happening in the last budget announcement. There is a deregulation commission. So when you look in terms of ease of doing business, where do we stop? We spoke about so many compliances have been torn up or brought up, but that is not enough. The tendency in our government is, and probably most governments, that compliances keep on growing. Any new law or any new discovery, and then quite often we find in the government that there is a knee-jerk reaction to any particular issue. One swallow makes a summer, unfortunately. And therefore it's a constant exercise. And what he spoke about is something which is of a larger agenda which I'm going to speak about in the context of India's growth story. Ease of doing business has been spoken about since a long time. And the problem, the main problem, the major problem there is the mindset of the bureaucracy. This is very difficult to change, in spite of the fact that sometimes, and unfortunately there is very little carrot or even stick applied, since that accountability is more or less negligible. We've seen in many cases where a person has done something wrong, even exploitative inspection, he or she gets away with murder. Now, we work at the level of various states. We work in West Bengal, Assam, Rajasthan, etc. And we've done a lot of work at the level of states. We find that the central government is, of course, much more proactive, as we have seen, at least some of the points that were made. In terms of legislative reforms, they are quite advanced and quite well-meaning. But the problem is that it doesn't filter down, it doesn't boil down to the level of the states. Let me give you an example. We have a Land Acquisition Act, which is very important for industrialization. We did a study once. We found that the same Land Acquisition Act was implemented in 5 different ways in 5 different states. So there is no uniformity, there is no coherence at all among various states. That is something which we've been pleading with the government of India that to now set up a NITI Aayog, and NITI Aayog should ensure that there is much better coherence in terms of policy formulation and more importantly policy implementation. Ultimately, as I said, we use 3 problems for many of the policies: implementation, and this is what happens again and again. All good policies tend to lie either on the website or on the desk or on the shelves of somebody or the other. Now, one major problem that we have is, as I said, we were speaking about investor dispute settlement. It is very poor. India had about 45 bilateral investment treaties, and 1 or 2 disputes were lost. As a consequence of which the government of India decided to throw out all the 45 BIs. The result that my predecessor, Speaker Bhuvnesh Pratap Singh, spoke about the practice that they resolve disputes through kind of conciliation procedures. Talking to the Chief Secretary of Water Rating, spoke about an example of a wall being broken down and compensation was engineered by the department here with the Chief Secretary of the Andhra Pradesh State. That is not the kind of dispute which we are talking about. We are talking about a dispute where there are very policy implementation disputes which often happen in many cases that you have a particular policy. I gave you the example of land acquisition pilot policy, which is very critical. And if it is interpreted in a manner which doesn't make sense, where does the investor go to? And the investor is stuck. He's already made partial investment, so he cannot even withdraw the investment. See, what's the dispute settlement? The other thing which we've been suggesting to the government for a long time is following the Korean model, in fact, to set up a good ombudsman, a high-level ombudsman, who can then resolve these disputes across the table, rather than going to a court. What the government of India did was, when they changed their bilateral investment treaties, they said you have to exhaust the alternative course of remedy by using the Indian courts. And the Indian courts are notorious, as my friend, the lawyer who's sitting here, would bear with me. Cases can take years and years without any resolution. And therefore, whatever is being provided in the international arbitration, quite often it is the words are in arbitration, which happen in Singapore, Paris, or wherever, that things are faster than what they would be if you follow the Indian civil court system. That is a major issue which, in my opinion, needs to be resolved. We did that India UAE treaty, for example, where we have put in now a limitation clause that if the dispute is not resolved within 5 years in the Indian judicial system, then the investor has the right to go to an international court. That did not exist elsewhere. So this is something which we said to the government of India, please bring it as a regular policy instead of doing it on a piecemeal basis with different parties. Now, the high-level commission on deregulation which has been set up, as I said, is quite a bold step, and the government is taking it very seriously. Bhuvnesh Pratap Singh spoke about the factors that there are 15 secretaries at the level of Government of India who are visiting various states to talk to various civil servants and to see to it that things move forward. In my own state, Rajasthan, on 18th, there was a visit by a secretary of the Department of Administrative Reforms. Nothing new with administrative reforms, but the fact that he is the secretary to Government of India was deputed to Rajasthan to do this kind of meeting with a series of officers. Now, what the Government of Rajasthan has done, and it's very interesting, produced a volume of what can be done in terms of deregulation, which runs about 300 pages. And some of the details which they have gone into are absolutely superfluous. So, what I'm only trying to say is that even the lack of understanding at the lower level is very poor. We have been using a tool, what is called regulatory guillotine framework, which relies upon a three-way test: legality, necessity, legality, and proportionality. If this three-way test is not passed through, then you should drop that provision or that rule or that law or policy. And if you need to be, you could amend it also. You won't believe me, it took us 1 year to convince the lower level of the bureaucracy who just could not understand it. As to why do we need to do it? I just wanted to focus on one particular aspect on ease of doing business, deregulation, etc., etc. But there are various other aspects that I could speak about. Since I've been told that the time is very limited, let me conclude here. There is a presentation of mine which also talks about various data points, which will be interesting, and later we circulate. With that, thank you very much.
Everyone, thank you so much to the forum inviting me here. And I would be very happy because I am going to represent the voice of the industry along with my colleague Rajiv, who's here, who's actually looking after the desk of Korea and the East Asia. Now, a lot of points has already been discussed related to the FDI trends in terms of the sectors, in terms of in terms of the regulatory coherence. But I feel from the industry side, what is very important is that any Korean company coming in India or any Indian company going in Korea, the first thing that they would like to see that what is being given within the country itself. Because the same expectation is being created between the two parties. So when we look at in terms of, when we look at in terms of India, I think the target of almost 10 billion of the FDI from the Korean market that is being expected by 2030 is not reflected in terms of the numbers, because if you look at the 600 companies investments in India by the Korean companies, still the amount of share is being taken care in the overall GDP of India is relatively not a very great in terms of the numbers. Now when we look at why particularly certain issues is not being taken care, when we look at the Korean FDI policy, what they concentrate largely on is the Foreign Investment Promotion Act, which clearly states that what kind of an enhancement is going to get by any company who's outsider and coming to Korea. They also talk about the tax incentives, which do include the corporate tax, income tax reductions, acquisition tax, property tax reduction, and the exceptions for the customs duties. It also talks about the cash grants, which also talk about the land purchase fees, land purchase expenses to be taken care, lease expense, employment, education, and the training subsidies is also being given. Industrial side support is also being provided by the Korean companies, by the Korean government, simplified approval procedures and streamlined FDI policies. Now when we look at India, vice versa of the story, what do we give? We are talking about the promotional and we are talking about the corridor building, where we wanted the Korean companies to set up in a particular platform where they should go and set up in a township model, right? We have seen the case of Samsung recently, right? Which do talk about, because see, it's good to know that what kind of a policies which are emerging in India, like Make in India, Pay Back. I am not going to repeat the same thing what the government has spoken about, because the issues are still not gone to the land reforms, because the issues are not gone towards the labor reforms. And today, when the workers are looking for the better conditions, whether it is Indian companies or the Korean companies, their say is not wrong. So it's not the issue that the Indian companies are facing, but it is the issue which the Korean companies and across the other companies are also facing. So what is in CII we are advocating more about is that internal reforms need to be taken care also. Your house should be in order to attract the investments from the other countries. And in that case, when I'm looking at a setup or a companies like Samsung, Hyundai, LG, a lot of companies which are coming in India, they have a lot more expectations. And that expectations cannot be corrected until and unless the government of India is going to support towards those reforms. I am not denying this fact that the government is not doing. Of course, everything takes time to do it, and that's how. But I think the very good point which is being raised by Mr. Pradeep, and I would totally agree with you that a lot of work is happening on the regulatory and the compliance part in India. But what is more needed is the actual issues of the workers, the actual issues of the trainings, the actual issues of the skilling, the actual issues of the reforms which is required by the companies in terms of the tax exemptions also. And that's not the Korean companies expecting. Indian companies equally expecting, if anybody is looking at this as a market. Because it's a beyond market, 30 trillion in the coming years that we are targeting. It's not a, see, anybody is coming in India is definitely looking at India as a consumer base. But that consumer base cannot be avoided until and unless we are not going to correct the things which are given in this. Now, this is the case I'm talking about large companies. Now, what about the MSMEs? The MSMEs in India today mostly they're coming up in a very rising manner in the areas where we should be looking at it. For example, like if you see in the case of electronics, in the case of engineering, in the case of textile support, if you see a lot of MSMEs, and these are labor-intensive MSMEs which are coming up. Now, the thing is that we need a lot of support, and I totally agree with the way Mr. Bhuvnesh said that they have created a desk, that's very fine, the matchmaking is also better. But what if the matchmaking is not happening at all? In the sense that what Korean companies are expecting and their large companies are expecting from the Indian MSMEs to be skilled and to be trained the way they want, will that be possible? Probably the question is no. Because so far, today the Indian companies are struggling with their own MSMEs with respect to the training and skilling. So first of all, I think a lot of work is internally is being required in the Indian in India to attract the foreign direct investments. And here, I think we are not even talking about the current changing dynamics in trade. Now, this trade which is changing tomorrow, when the relationship with US, EU, and UK is going to emerge. Of course, the old partners like Japan and Korea is going to face that tough competition with others. And in that regard, I think it is important because tomorrow if US is going to say the same thing, probably we need to do. If the UK is saying we need to do, right? So in those cases, I think it is very, very important that we should be looking at. Now, this is all about the challenges, this is all about the problems that we have, because it's very easy to show the gloomy picture, because very few people actually talk about on the issues which are actually problematic for the companies. The other areas where we have not highlighted the opportunities and the collaboration, I really see the AVGC is the sector. That's the gaming sector, animation sector, which is going to come in India from the Korean companies, because a lot of young population in India is actually looking at the Korean cinema. If you see, they're admiring, they're inspiring, and I think lots of collaboration is required in the AVGC sector also. One more area is also the cosmetic, which we found that it is gaining momentum from the Korean market as well as in India, because of the scale of the MSME's involvement into it, and a lot of women-led it is because of the consumer base in India. That's something that we are looking at from the cosmetic side. One more thing I would like to add, I'm not talking about the electronics, EVs, auto components, I think that is already being taken care, but what is not is also the digital aspects of it, because a lot of new companies and the new emerging IITs as a startup, or you can talk about the unicorns if largely look at it, they are going to be in the digital space, and in that digital space, India has a lot more focus towards the digital side, and Korean market has that potential to tap it. So I think these are the probable areas that we can definitely look at it. So with these words, I think I would not like to extend it much, but these are the areas where we should work on, we should look at the collaboration, and we should progress it together, because there is a lot more that we can do in this space. Thank you so much.
Thank you, Dr. Swati.
And speakers today. I think there hasn't been anything that has not been said as of now, but I will still like to take ahead this platform and share what India really does, and how can we support more the kind of companies and the stakeholders who are relying on us to get more support and more infrastructure from our side, and looking forward to sort of talk more about it and probably join forces to really make India a very I would say facilitating kind of an organizing platform for all the companies to come together. Just to start with it, I talked about already Mr. Bhupneshji has set up the context of the FDI policy. I will quickly take you through FDI policy which is there in India. While FDI gives an economic growth boost, capital inflow is what that drives expansion. It increases GDP employment by fostering industrial activity and innovation, job creation and skill development, and obviously new businesses and industries help in creating employment. FDI as a part of it has been contributing to the infrastructure development, technology transfer and employment generation. There have been several reforms that have been made, which Bhupneshji has also spoken about. And he also talked about the government route and the automatic route. The prohibited sectors which require government approvals and are not too open for FDIs are some of the critical areas like atomic energy, railway operations, real estate businesses, trading, and manufacturing of tobacco businesses. There are several, I would say, archetypes that are available in India for foreign companies to come and invest, which includes being an wholly owned subsidiary, limited liability partnerships, license offices, branch offices, project office, and forming trust. There are several laws which are applicable, including Companies Act, Limited Liability Partnerships, Foreign Exchange Management Act, Income Tax, GST, which has been widely spoken about, and labor laws. There are several compliance requirements that are also needed, initial corporate actions, reportings and filings, foreign liabilities and asset returns, and registrations that include GST, professional tax, EPFO, trademark, and importer-exporter code registrations. There are sector-specific approvals that are also needed, which includes environmental clearances, fire approvals, pollution control, and other depending upon the business activities. Now I'll start about the FDI framework, which is there in India. The ranking which World Bank has been giving is now a bit outdated because they have stopped publishing it. However, until 2020, India improved its ranking from 142nd position to 63rd position. This has been a long journey, I would say, wherein there were several reforms that had taken up, which included simplification of the kind of compliances that were required for the companies to actually come and establish their businesses here, which were in the tune of 42,000. Rationalization of permits and enforcements also happened, and then national single window systems were introduced. I would like to give a quick statistics there on the national window system. Since its launch, I think almost lakhs and lakhs, around 6 lakhs of applications has been received just by the national single window system, which actually enables businesses to come and really have one platform where they could have all the I'll quickly just take you to the slide on national single window system. It's a single interface of all the businesses, which wherein you will get real-time status of your approvals requirement, grievance redressal, and it also helps in enhancing EODP issues which most of the businesses are facing. It actually is connected to around 30 plus central ministries and state departments, with almost thousands of stakeholders who are continuously working to improvise the business ecosystem for the foreign investors. The processes include 3,500 plus G2B services and also has the entire spectrum of approvals, including schemes, registrations, amendments, and renewals. The usage has increased to about 4 lakhs, like I said, and as of May last year, there were around 6 lakhs of applications that were received, and ministries as well as government departments are working continuously to improvise single window system. Talking about the sectors which are included in the automatic tool, like Ms. Nishti also said that most of the sectors now have 100% LTI limit. That also means that any company can come, take a simple approval from RBI and can go on and set up their businesses. They do not really need more approvals from the government to come to India and set up their businesses. Petroleum refining by the public sector companies is the only one which is limited as of now. Other sectors which are critical for India, including credit information system, power exchanges, pension schemes, these are the ones where 100% FDI is not allowed, again because of the strategic considerations required from the government side. There are other sectors and activities which are a little bit restricted, like I said, because of the strategic considerations. However, with a simple approval from the ministries and RBI, you can invest up to the limit involved. Lately, in the recent budget, 100% FDI was also introduced for the insurance sector. While the 100% limit is yet to be formalized in terms of the processes and the several other considerations required, however, we do insurance sector to really pick up with this announcement. Talking about the desk which the ministry also talked about, this desk was launched in 2016, and we have representation from Modi, which is ministry in Korea, and Kotra, who are also are part of Korea Plus desk. What Korea Plus really does is end-to-end facilitation. That means that we actively reach out to the companies in Korea, gauge their interest in entering India for investments, and then handle them to their entire journey while they establish their businesses here, as well as we also do the post-establishment care, wherein we help them resolve their EODP issues, which Bhuvnesh also mentioned. The first FTM mechanism meet also happened in December, where we tried resolving 12 issues with representation from the both sides, that is from ministry side, as well as representation from the Korea side with the companies. Talking about the FDI inflow from Korea to India, it has reached its peak and it has shown a decline during the COVID period. However, it is still on its trajectory to improvise. And thanks to a lot of companies who are there in India, like Hyundai, Kia, which has been contributing a lot for the actually economic improvement for India, which is in the automobile sector, metals and mining, softwares and hardware companies, and electronic equipment. LG, Samsung has become the household names in India for any of their products, and I do not even remember not calling out these names while looking for the making a decision of purchase of any electronics. The top 5 states, which again Bhuvnesh also mentioned, are Karnataka, Maharashtra, Haryana, which has seen most of the FDI from South Korea getting established and grounded in these states. Talking about the sectors, while investments from South Korea to the world has primarily been in the services sector, the following sectors are electronics, chemicals, construction. However, for India, automobile, electronics, construction and chemical sector has been the critical ones. We have also seen continuous interest in the capital goods and the pharma medical devices sector as well. A quick view of how the FDI has been flowing from Korea to India. Like I said, primarily it has been in the auto sector with the investment in the tune of around 15 billion. That is in cumulative of last 5 years. Around 9 billion in energy sector, followed by pharma and ESG with 5 billion and 2 billion respectively. With this, I would like to thank you. However, like Bhuvnesh also mentioned, for any of your issues, right from exploratory stage where Korean companies are exploring for information and scouting, which geography to actually select for expanding their manufacturing or expanding their business manufacturing base, we help them across the sectors in supporting with the information. And in that journey, we also help in site selections. We also help in getting them approvals, seeking them feedback from the ministry, and if any help is required across the ministries, right from the state's point of view as well, we help them do that. And also, like I said, once your businesses are here and you still have EODP issues, we would go ahead and help them. We would go ahead and help them get resolved as well by channelizing and bringing all the ministry representation together. With this, I would like to thank everyone, and I look forward to more, supporting and collaborating in this ecosystem. Thank you.
First, I would like to say very sorry. The
we have lost the panel discussion in the first session. But now we have very enough. We have the 3 panelists, so I think about 20 minutes we will have the panel discussion. So first, I would like to ask a question by the panelists, and then I would like to open the floor. So if you have any questions or comments, please raise your hands. And okay, thank you so much for all. So I have so many questions, but I do not give you all of the questions to you. So first, I would like to question to Mr. Belong to the Shinhan Bank. He's expert in the foreign exchanges market. So as far as I think, the Indian economy is, I think generally the economy is impacted from the external or internal shock. But I think that in case of the India, the real economy is less impacted from the external shock compared to Korea, because Korea is highly exposed in the external sector. But I think compared to in India, compared to real economy and the financial market, including the foreign exchange market, the external sector is much the impact on the financial market compared to the real market. Why?
So first of all, I think I want to highlight the Indian dynamics first. If you talk about the numbers specifically, I think the domestic numbers remain extremely strong. Starting from the trade deficit numbers, which is narrowed to almost around $14 billion, which is a very healthy sign. Secondly, even if you talk about reserve spending in terms of understanding curbing the volatility or excess volatility in the market, RBI has been very vigilant. Third, if you talk about liquidity measures, particularly when we are having a liquidity crunch, RBI has been doing a wonderful job by managing the liquidity really well by having buy-sell swaps, OMOs, or PRRs. Fourth, even oil has been quite supportive to India because we being almost 70% of our imports are oil, and when the oil is at 70% of our imports and the oil is trading at $70 per barrel, I think it's supportive for our fiscal map, particularly current account deficit. So internally we have been strong. In terms of the inflationary numbers, we have cooled off to almost lows of 2021, that is at 3.62%. So growth dynamics have been the fastest amongst the emerging markets, even the world markets, at around roughly 6.2%, though the anticipation still remains higher. Consumption demand, rural demand has been on the rise. So all these have been extremely positive factors for India. And going ahead also, I believe two negative factors which are not pushing us possibly is the FPI flows, but I believe those are hot money. I think it doesn't matter that much. On the FDI front, we have grown multifold on a year-on-year basis. So that's one of the reasons I think Indian economy continues to be more at a faster pace, very well managed both from the government as well as from the RBI perspective.
So after the returning Trump to the White House, the foreign exchange volatility is increased. So that means the foreign exchange risk is increased. So what kind of some countermeasures for the companies to undertake these situations?
So first of all, I believe irrespective of the volatility, I think a corporate has to follow some principles. First, I believe the first policy I would say is there is only one certainty, that there is no certainty. And secondly, I believe that corporates need to take a decision via weighing the probabilities and not only by finding the results. So it's important that what kind of results are there, but at the same time, when is the time and what is the process they are following to take that hedging strategy is quite important. One important thing I want to highlight is there is a very wafer thin line between hedging and speculating. A corporate does not come to know that from hedging when are they turning as a speculator. So my request to corporates is FX is not your business. Your main business is your sector, maybe automobile, chemicals, maybe oil. If that is your main business, I think the alpha which we need to make is from that respective sector. If you try to make some money out of FX, we may make it once or twice, but there can be 1 year you can drop as good as even 10 years of your income. So it's important. Third and lastly, I think having an active risk management policy in place, irrespective of the dynamics, what the market is, every corporate, irrespective of being an Indian or a corporate, they need to have an internal risk management policy into place, clearly defining the hedging strategies, irrespective of the volatility patterns.
Okay, thank you. And Dr. Swati, as far as I know, CII is one of the biggest private company organizations representing Indian companies. So I think you have so many meetings with the private sector. So, and also your presentations, you explain very well the FDI issues. But I think what kind of thinking in Indian companies in terms of the trade and tariff policies? I mean, for example, the component of the mobile phones, sometimes your government increase the tariff and sometimes decrease. So it's very confusing for us. So what I can understand in the government policies, but how about private companies? What kind of thinking of expanding for the government in the trade and the tariff policies?
Thank you so much for the question. I just wanted to say that the world is all about protectionist now. India is not an exception to it. So when you are looking at the developing your own domestic market, and you come to a stage where you realize that your companies are competitive enough to handle the international market. It's not the case of India, but it's the case of China as well, when they have increased the tariffs, export controls, export restrictions being taken care to safeguard the industry. So I think it's not an exception that only Indian government is doing. Now, coming from the government side towards the private companies, of course, any private company, whether it's Indian or a Korean or Japanese company, would like to see a predictability. I definitely agree with you that it's not a sign of predictability, because everybody would like to see the predictability in the market. When you have tariffs and trade should be in order. Specifically these days, EU model, if you see, they're not looking at tariffs, but they look at the regulations. If you look at the Chinese model, they look at tariffs as a lower, but they have a lot of their internal issues with domestic side also. If you look at US, totally towards the tariff side. So I think India is not an exception to it. We do, because as and when we realize that the market where we require some kind of a safeguarding, I think the government is taking those steps, because that's what the private companies are guiding to the government, that look, now we are competitive enough and we would be ready to face zero duty in this sector. But whenever you feel that you are not competitive enough, you would like to look at the tariffs on the higher side. And being very blunt here, or being very friendly here in my response. And one more thing I would like to add here is that when you're looking at the US policy, which is now coming towards the Indian side, a lot of pressure is being built. I think private companies are quite sensible enough what kind of a response we're supposed to take. And I think would be talking appropriately, because UK and EU is also sitting on your head, and any change will happen to certain policies will also going to affect the UK and EU in this case. Only the last thing I would like to talk about is related to, you said, the tariff structure of India and EU. So lately we were doing some study, my trade policy team, we were doing a study where we realized it's not only India who has the raw material duties are high, but even the South Korean tariffs are equally very high on the raw materials, in fact. So I think the same question applies to Korea as well, that why do we have that? Because generally we say that the finished goods should be on a higher side, and the raw material should be on the lower side. But that's a vice versa in the case of South Korea and India. So here we have a complementarity in terms of our
right, in Korea also the Korean tariff is very lower than the India, but as you're right, in the agriculture sector, some items tariff is very high to protect our agriculture sector. Okay, thank you.
This also show us the environment in doing business in India, a kind of in terms of index is very good compared to the 10 years back. But anyway, most of the foreign investors, including Korea, have difficulties. So, what kind of difficulties you can find very popular, and why is very important the difficulties, and also in that case, what kind of advice for them?
I would like to say that across these geographies within the Asia region, I think the most common one is navigating the business and the regulatory ecosystem here in India. Most of the issues that I have seen coming up is on QCO, which is quality control measures, BIS issues, DIN issues. I've even come across PAN issues where companies are struggling to get their PAN numbers. So it is as minute as this to as big as like Bhuvnesh also mentioned, the wall getting demolished and for that the company is requesting for compensation from the government, which we were trying to channelize. We have also received issues wherein Chinese workers are not allowed, are not given visas. Uh, this is also because most of the manufacturing bases for all the global companies are now in China, and for them to even come to India and set up the manufacturing bases, they would need the Chinese skilled workers and technicians coming into India to actually conduct the operations. So these are the typical issues that we have seen coming up, could be big or small, but any which ways we try to help companies as much as possible.
Thank you. The time limit now. I start to open the floors. Do we have any questions or comments, please? So, micro. And also, is there any another persons to raise questions or comments? One person. At a foreign policy think tank called Transfer. My question to the panel is regarding the shipbuilding. We know that much of the global shipbuilding production that happens, it happens in either China or South Korea. Almost 90%. China has around 71%. South Korea around 70%. Used to be higher, but in the last few years it's been dropping. On the other hand, we recently saw that in the last month, the Indian government has announced that shipbuilding will be a part of Indian infrastructure now. So it's easy for us to get long-term finances for shipbuilding. So given the experience and skills of South Korea in shipbuilding, and since India is a young population, so how can we collaborate better? What are the progress that's going on? I'm aware that shipbuilding is part of the MOU, but there's yet any sign between India and South Korea. So I just wanted to know the progress. Thank you.
South Korea and Japan in shipbuilding for India. Capability wise, you rightly pointed out, we are way behind than the global, I can say, peers. But with the help of collaborating with the developed economies who are topping shipbuilding right now, which is Korea, I think there has been a lot of talks within the governments of the two nations to form a collaborative sort of an association to actually help India develop its shipping sector. So even I know after that. However, we are facilitating one of the shipping companies in entering India right now.
Can you list the numbers?
I just wanted to add from the company side, if you see the shipbuilding is one of the areas also which is talking about logistics these days. And improvement towards the national logistics policy, I think the government has a quite focus towards the shipbuilding, and that's why the recent announcement does talk about. In fact, a lot of prime minister visit to the different nations. If you talk about even in European Union or sometimes to the US or Korea or Japan or other countries, if you see, largely the shipbuilding is coming up as a important area because this is the area where we feel that we are lacking in terms of technology and a lot of investments can be done there, and we feel that we collaborators like Korea, collaborators like EU, other partner countries can give more towards this. That's what I would like.
Okay. Mm, I'm not just surprised in the shipbuilding sector, but I would like to add something. Uh, First, in terms of the international competitiveness in shipbuilding, I think Korea is number one. Even at this moment, China is rising so rapidly, but since at the experience, Korea is number one. And second, in India, shipbuilding is very, very important, and the collaboration with Korea shipbuilding is very, very essential. So third, one thing we have to remember is at this moment, new competitors is rising. I mean, America. Now also America is asking the helpness and collaborations with Korea in shipbuilding sector. So what is meaning? We Korea have so many companies, but in India also and America. So I mean the inside in from the India to compare to the America, the more and the friendlier the environment is investment of one collaboration. Without this, it's not easy to make collaborations. So it's very important things. So we have to think the competitor, new rising competitor of America. It's my comments. And sorry, I did not steal you the lunchtime, so I also need the energy. So anybody? Oh,
I'd like to send a question to home on this shipbuilding. Shipbuilding itself. Shipbuilding is very difficult to get it done because the skilling between the engineers in India itself. There are no good engineers available in India who can contribute to the shipbuilding. So this is a very, very difficult process for the customers. I would say the people in the same industry in India need to take care of that. And in that case, Korea can play a more in the educating the so-called skilling effects of the engineers in India rather than building it up. It's a capital intensive industry. You cannot help it unless there's a lot of money into it. And you may see many of foreign companies also not doing pretty well on the shipbuilding area. But yes, there is a ton of opportunities there, and then there are 90 things the world markets are always there. Like the opportunities Mr. Trump is offering to all the world for getting it better than for their own industries. So I think in the particular shipbuilding area, this is very, very difficult unless the Indian engineers are skilled enough to get up to that. This is very difficult thing a lot of times because the engineering institute itself does not provide it. My wishes for Indian engineers.
totally, I agree.
I teach at KI-FEIF. My query is that Boris, you mentioned in his presentation that we are having 14 Japanese townships in India. So is there any Korean township in India? And if not, what is the procedure of making whether Korean companies or Korean businesses they make their township or government of India help them? So I would like to hear from this government.
So these townships, they are created in collaboration from group of companies who are existing across India and requires sort of I would say, cultural and I would say affinity where their cultural I would say peers are also there. I think that helps them be at home, and that is the intent of JIDs. It also helps in bringing the entire supply chain to these townships. This is where they are getting their part. It is not driven by one person or one agency or one counterpart. It is driven by the entire ecosystem, which involves maybe Korean side of the presentation, Indian side of implementation, in conjunction with the state ministries who are open to establish such kind of functions. But where it helps is that when you move with your supply chain, you are not dependent upon importing raw materials or attracting more, I would say, taxes and other fees that you need to pay when you import. With all the entire supply chain being here, it helps in marginalizing your costs, and this is where the idea is coming up. This we are also doing for other Asian countries, and if Korean townships also come up over there, I think that would be again actually beneficial.
Thank you. Definitely we need to work with the conversation, but because of time, it is possible. I'm very sorry. Anyway, yeah, thank you so much, all of our speakers and panelists and the participants. And now we will enjoy our lunch. Thank you so much. And also, I inform you the coming the end of the before June, we try to make one of another forums. In that times, we will deal the semiconductor the industries. Please come again. Thank you so much.
Good evening,